And that's not bringing another voice to this conversation. Bartlett's Holly Mazzocca and also Wells Fargo's Scott Wren as well. You guys both heard what we just spoke about with Lauren here. So I'm going to go with you, Holly, first on this one. As you talk about the markets at or near record highs again, Lauren laid out the case for that broadening out trade. Also this idea that we're watching those certain key parts of the market. Is this still a trade that is contingent upon names like NVIDIA, Microsoft, Apple, and others leading the way higher?
Well, we certainly think that there's a level of interest here for the AI trade to continue, and that's what we're seeing. We are, though, looking for how that trade can expand beyond the Magnificent Seven. So while we long-term continue to favor those big tech names, we're also looking for opportunities that start to look at how you're seeing productivity engage across the market.
Okay, so that productivity being engaged across the market, where does it manifest itself most clearly in your mind? What parts of the market do you really start to see it really evident that it's the path that investors should be taking?
One area where we are seeing it is in the industrial space. And there's stocks like Eaton that we really favor in this environment and area because they are not only an AI play and a growth of the data center play, but they're also looking beyond that as we continue to see the modernization of our electric grid. We're expecting the U.S. electricity demand to grow sixfold in the next 6 years. This is an impressive amount of growth, and there are lots of companies that will benefit from it as we start to look beyond just the impact of those Mag 7 names.
All right, so AI and Mag 7, Scott, have been a big part of this story so far. We also broached the idea that the rate picture is something that has to be considered as you look at the future path for markets. In your estimation, how much is the fundamental story behind AI or the growth rates there the more important or least important part of the market compared to things like the macro rate picture?
Well, Dama, I do think, clearly the market expects a rate cut this week, and we're almost certainly going to get one. But I think the AI spend, the AI CapEx is a huge deal here. And really what we saw in the first couple of quarters of the year, let's face it, earnings blew away what the expectations were. They doubled it in both the quarters. And a lot of analysts thought maybe we'd see some backing up of, CapEx is going to be a little bit less. We're a little cautious. Instead, it seems like most of these big companies, they either held their CapEx level steady or they increased their estimates. So, there's a lot of this market rally built on AI CapEx. I don't think that's going to change anytime soon, but I do think, you mentioned broadening. As we move between now and the end of 2026, I think it's likely that, the Mag 7, Mag 5, Mag 7, whatever it is this week or month, their earnings growth rates are likely to slow some. You can't grow 75% year over year your earnings. And then we're going to see a broadening out where the other 493 companies, their earnings improve as we move through next year. So I think it'll be a little bit of a broadening, but these big cap growth names that have great products, great demand, great cash flows, I think, it's correct to say they're likely to take the market higher, which over the next 14, 18 months, we think it is going to go higher.
Holly, there's also a case being made right now that as you start to see interest rates hypothetically move lower in a certain type of trajectory, it does make holding cash in money markets a little less attractive incrementally. It does power some of those valuation type stories. Is it about looking for catch-up trades at this point, or do you kind of just go to where the momentum has been for the past couple of years now?
We're expecting to see that market breadth continue, as Lauren mentioned as well. This idea that there are broader opportunities out there. And when you look at analyst expectations, the expectation is that the Magnificent Seven earnings will start to moderate over time while you see this breadth expand to the financial sector, to the industrial sector. You could see the consumer discretionary continue to do well in this space.